Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of July 31st, last trading day of July 2024, about 6:10 p.m. Central Time. So, the news today, let's back off away from the Fed and all that first. Israel attacks in Tehran a Hamas political leader, one of the main negotiators, in fact, for the peace deal, and takes him out. Obviously, Tehran looking at this in bewilderment as this person was there for the new president's inauguration with other luminaries of Iran. And now the question is, can people be safe in Tehran? So what will they do? Well, they're going to have 3 days of national mourning in respect to it, and then something will happen. It could happen at any time, but Israel had to calculate this, and it's probably prepared to take one on the chin. It was surgical from maybe Israel's point of view. Did you have to do it in Tehran? They just attacked in Beirut, so I don't know. They seem like a kid in a playground that's getting a little out of control here. When we take a look at what's going on in the markets, pretty strong afternoon coming. In other words, evening, late evening, if you will, for some traders, but aftermarket for me at 6:10, and you could see the markets are gaining again. Part of this has to do with earnings after the market that were on a good note. But, you know, at some point we're going to be asking ourselves the reality of the situation. At what point is this market high enough with all this having taken place? And when the Fed begins the cutting process, what are they really saying? Are they saying the economy's rolling a bit? I get the mega story, but the question is, what about the other stories? And that's what's kicking up the NASDAQ right now and keeping the S&P up, is Meta did well, and you're looking at other chip makers doing well. We know that story. So now it's about the other parts of the economy, and we'll see. You know that energies with the attack in Tehran had to go up today, and they did. They rallied rather big. Now, we have a slew of events happening tomorrow, so let's take a look. The Bank of England meets to set their monetary policy meeting in the morning. Flip a coin, which way they going? Challenger Group will update their monthly estimate of the planned employer cuts. We'll get that at 6:30 a.m. The second quarter preliminary non-farm productivity data comes out at 7:30. Jobless claims at 7:30. S&P Global Group will come out with their July manufacturing sector. The PMIs are going to be the final ones, and the ISM data will be at 9 o'clock in the day. So you got to look at all this and figure out where you're going to be with some of that data, all right? We saw today that the Bank of Japan, double whammy. They came in, they both raised interest rates, and they gave you the cut that they're going to do, the planned cuts in security buying. So the weekend, in reality, probably gone. Carry trades have to come off in that and move to other markets. The dollar sank today at the expense of other currencies, and the metal markets took off to the upside. You can see gold's now at a new high. If it were to close right now, this is a new all-time high close at 24.46. Yes, you're not at the highest you've been in the markets here, but remember, that's a continuation chart. This isn't, all right? This is the Dees gold. And the Dees gold now coming back up, and you're out of your downtrend. So today's move took away that lower high, lower low data. You've had a vertical rise where you now took out that high, and you're back into no man's land. The market stayed about 3 days underneath the 18-day average and right back over it at this point. If it continues going up, the Bollinger Band at 25.24 is the next resistance, and support, I think, will be around the 24.59 level. In momentum, it's turned up. So downtrend phase over, or correction phase, whatever you want to call that, and the market on a better footing. Silver's gaining a little bit on the gold market right now when you go to Dees. You lost the bearish embedded reading in some of these areas, and you could be getting back up to the 18-day average if it wants to pick up and run from here. SLV in the ETF lost its bearish reading as well. You're losing in the copper market your bearish embedded reading. You're flirting with it. So in order to get it lost, you got to do this tomorrow. So this rally is suspect, but if the market breaks back, expect support now at 414. So this 200-day average that I've shown you, just as a chartist, take the name of the chart off. That's the smartest way you can chart. It's holding with the Bollinger Band. That's the way you look at it, okay? Is it saying, hey, the market's made a major bottom? It is not. It is saying the down phase is over with the rally today where you broke this pattern of lower highs, lower lows. If I step back on the chart, I think you'd agree with me that coming into today, you had that. You move to the sideline here, you have the embedded reading, and all of a sudden you're losing that reading. If it stays lost, I can make an argument to get back to that 18-day average of closes. If it doesn't, I'll make an argument for 414 again. In the platinum market, I was looking all the way through and talked to you about this the other night. The market, let me get over where I want to be in this. Come on, come with me. There you go. Same thing as copper, by the way. You lost the embedded reading. If it stays lost, the next objective should be the combination, because you've now, it's like a rubber band. You pulled the selling, you let go of it, and maybe you get a further thrust. Maybe you can get to the 18 and the 100-day average in green. Pretty much what the market did. And in the dollar, you ended the uptrend. Remember, we have talked about this. What is the dollar going to do? It keeps fighting on the way back up at the resistance of the 100-day average and the 18. Well, today it stepped down magically. I love to use that word. Magically, it paid attention to the 200-day average. You're in the middle of no man's land. Some people are saying, oh, the dollar's done. Other people are saying it's pullback. I don't know. I know this is not a trend. And I know that this phase at first this was a bear market rally. You did close over that, and now this is just denied that. So it was no more than, at that point, a bear market rally that ran into resistance at the combination of the 18-day average and the 100. That's how I'm going to look at it. You know, if you like what we do on these charts, if you're using TradingView, and a lot of you do, I know that, we make available a suite of 6 powerful indicators, these and others that I do in my charts for my clients. So it'll be the swing lines that you're going to get in there, so you'll be able to do them just as I do. All the moving averages that I use, there's more than you see here, by the way. Bollinger Bands. You're going to get window envelopes. So you'll get my numbers if you're a subscriber to my research, and my slow stochastics. They'll be different, as you know, than the others. You might say, why isn't Ira's match mine? That is the reason. This all pairs together with my videos, with my courses, with my morning subscriber videos, by the way, and it doesn't take up much room in your TradingView. It uses basically 2 slots, and you have more than 2 slots, so I don't think you're going to have a problem there. So you go to iraepstein.com, go to the right-hand side, look up at the top, you'll see Client Resources, click it, you'll see where this is, sign up there, and we'll take it the rest of the way and send you an email, and you'll be all set up. I'm Ira. You have yourself a great day, and I will catch up with you in the morning. Take care now.